Another positive news coming in for Jio. The American private equity major General Atlantic this time round has a plan to infuse 6,600 crore for 1.34% stake in Jio platform. With this deal coming in, it's the fourth check coming in for Jio platform in a matter of few weeks, and over 66,000 crore has been collected by the company via the deals made by Facebook, by Vista, Silver Lake, and now General Atlantic. So fourth deal coming in, and the management and the company moving ahead as planned, as guided, as far as reducing the debt on the overall company is concerned. They have 1.5 lakh crore worth of debt, and the management had guided for reducing the debt by March of 2021. But the CFO did hint that it is possible that they may achieve that target by December, and the way deals are being announced one after the other every week, it appears that the management is working in that direction of achieving that target ahead of the time. Valuations, Jio platforms, this deal also coming in around the 5 lakh crore valuation, 1.34% stake General Atlantic has picked up. Historically, General Atlantic has been doing big transactions in early stages of tech companies, so this also has a tech angle to it. And now global marquee names are getting really excited, and they want to take a piece of the pie of Jio platform. So it'll be interesting to see how the stock reacts. The word had gotten out early only, so this is not entirely new, but of course it's very incremental, and now the deal is official, so it's another big positive.
It does seem like a big positive all around. Deven Choksey joining us as well this morning. Deven, what are you making of the latest feather in the cap there for Jio?
Good morning. I think it is basically continuing from where they started, and probably I think this is the fourth deal, as rightly mentioned. More importantly, the amount of money which is being collected, I think is collected from some of the very strategic and very focused investors. I think along with the other two, this General Interacting deal also, I think they've been investing with a good amount of strategic companies, and as a result of it, they bring a lot of value as far as I think the business is concerned. Most importantly, in Jio platform, different verticals, including finance, including e-commerce, healthcare, education, entertainment, etc. I think with this kind of varied experienced investors coming in, they bring a lot of strategic value and a lot of connections along with. So I would consider that I think this is the best way to possibly, I think, have the finance at the same time, have the strategy together, which could possibly help the company going forward when down the line 2 years or so, when they go listed, I think they will probably find themselves in a better valuation prospects, I think, as far as the investors are concerned of the land.
Market should start getting worried about the cash flow which will not come from the refining business, and now it appears that the Ramco deal will not go through. So while they've moved fast and furious in order to reboot the company from a refining stroke and petrochemical company to a fast moving Jio company, but Jio is not large part of the profit. Jio is still a cash guzzler. The profits and the cash flows for Reliance will be coming from the refining business, and that's where the problem is.
I think annualized basis, the Jio platform has already started generating 10,000 crore EBITDA as we see from the last quarter's results. And if these two platforms, one is enterprise platform and second is fiber to home platform, these two platforms are launched in this financial year, then somewhere in 21-22 financial year on an annualized basis in some of the quarters, I think you might end up seeing the EBITDA base double or more than double from 20,000 to 25,000 crores. I think this is what I think one is basically expected to see from Jio. So it's going to be, I think, a very strong candidate as far as I think generating the higher amount of flow is concerned, cash flow is concerned. We are not considering into account the prospects of I think the e-commerce like I think the JioMart, JioMeet, where I think you would be ending up getting the transaction-based revenue along with the subscription-based revenue as well from this property. So all in all put together, according to me, I think the investment part of the Jio is probably over. Now we are likely to see the benefits of higher cash flows coming in. And as far as I think the oil to chemical company is concerned, in my viewpoint, I think from hydrocarbon-based activity, I think the company would be probably more focusing on the specialty chemical business. And that's where I think one will interestingly watch at the development as to how the Aramco kind of players would enter. Though they may get late, I believe that I think they might be somewhere in the September quarter, or if not, probably I think December quarter. But in that situation, I think we will be seeing the additional inflow coming into the company going forward.